Hello, everyone, and thank you for joining us on this Financial Literacy Thursday. My name is Margaret Businje, and I'm very honored to share this space with you tonight. During this Life Insurance Awareness Month, we are reminded of a powerful truth that life is unpredictable, but preparation is possible. I'm deeply passionate about financial literacy and committed to helping families understand that life insurance is not just a policy, it is a promise. It represents security, stability, and peace of mind for the people we love. So today, I'll be sharing a simple insight on what every family needs to know. My goal is to simplify the conversation, address the questions that many hesitate to ask, and empower you and all of us to see that life insurance is more than just paperwork. It is a lasting piece of legacy. Thank you for joining me once again. So, to begin today, we are going to do a simple exercise, a needs analysis to explore together whether you truly need life insurance, and if you so do need it, how much is enough to properly protect yourself and your loved ones. So most of the time when we think about life insurance or how much we need to protect ourselves or even our loved ones, we always think about something that is easy to do, something that is cheap, something that is not going to cause us feel like we're paying something. But to be realistic, to pick a policy for yourself or your family, it should depend on a real needs analysis of what exactly is needed to be protected. Like the same way you protect your home or your car, you look for the value that actually fits into the value of what you own, your home, your car. You can't protect your home with less than what its value is. So the same for our lives, the same for our families. We need a policy, the life insurance protection that is going to come to our rescue if anything was to ever happen to us. So the real protection or properly protecting your family, we do a needs analysis to visualize what you need really to protect. Is it your home? Is it your family? Is it your children? Is it your finances? Is it your future retirement plans? So together, we sit and actually visualize the numbers that actually fit into your needs. As we all know, every family's financial need is different. Every individual's financial need is different. Because of that reason, every individual or every family has a different financial need. So before we start, I'm going to go ahead and share my screen and go through this simple exercise. And I believe by the time we finish this exercise, I want you actually to visualize it as your own. What we're going to do is just an example, but put your real numbers, put your real family experience in this so that by the time we are done, you have a clear picture of exactly, do you really need life insurance? If you really do, how much is it? And how much are you willing to actually get to protect your family? So let's get started. I'll go ahead and share my screen to start the exercise and go from there. Needs analysis. So with this part, I picked a name, John Shema. John Shema, who happens to be a husband or married to someone with two children. I didn't put the children there, two children there. They happen to have a home. So Mr. Shema wanted to know how much. Mr. Shema is actually 40 years old, and he needed to know if I'm trying to protect myself or my family, how much of a life insurance do I need? So we go through with this, and this is an example that we need everyone to think about. Think about yourself. When you look into Shema here, think about it as you're thinking about yourself. or even your family. This is an example that is going to help all of us learn together how to find out how much you need to actually effectively protect yourself. So when we meet an individual who needs life insurance, we're looking into how much do you need? How much do you need to effectively protect yourself or protect your family? So the things we look into are those actually pointers that or points that actually take much of the income that we earn. For us to be able to afford anything we own, or even those cars, or even going to school, anything we have to have the income. That is why we're actually trying to look together to see how that magic number can be calculated. So, like with Mr. John here, we want to look into if Mr. John does have debts, does have car loans, does have credit cards, student loans. We are actually estimating that to be 30,000. Again, this is just an example. Think about this for your own sake. Think about, do you have debts? Put it down. Jot it down somewhere so we can move along together. By the time we finish this simple needs analysis, you should know exactly how much you need to protect yourself. So for this case, Mr. John does have altogether here debt. He's actually very good because he doesn't have much with the students' loans. Some people do have actually over 50,000 or even 100,000 in student loans. But John here only has 30,000 with everything on this part included. Debt, car loans, credit cards, students' loans, 30,000. And then we try to talk to Mr. John. How much do you think you need minimum? Okay, maybe averagely on final expense. Final expense is if someone passes to give you that well send off. How much do you think you need? Mr. John was like, I'm not so too extravagant. I'll need at least 20,000. We put it down there. And then Mr. John again, he does have a home. On his home, he's still owing 300,000. We put it down there. Remember, to do this needs analysis, we're trying to help Mr. John to figure out how much in life insurance that he will need to be able to protect himself and his family. So he has an outstanding mortgage of 300,000. As we're talking, Mr. John again has two teenager children who are in school who will soon be going to college. So we're trying to help Mr. John here. We're looking at how education, how expensive it is now, even if they get some help here and there or some scholarships here and there, to put two children in college, at least on a minimum side, each child will need 100,000. With two children, we were putting this together, it became 200,000. And then to be able to pay his monthly mortgage, pay some of those debts he pays every month without even putting the final expense because he's there. The income replacement, he needs like 30,000. 30,000 at least, that is like 6,000 per month. So we're putting it there. That is if Mr. John was to be sick and he's not able to go to work, maybe a year. How much will he need to do to be able to replace his income? So when we put all these numbers together, this is just actually putting together what he's actually, we're not even putting like extra income he will need to go out to do other stuff. If we just to put down all these numbers, literally, he's coming to 580,000. So when we help a client to figure out that number, when you talk to someone and they will be like, how much do you think you can afford per month to pay your insurance? What usually comes to our mind is that little number, the minimum, the bare minimum we can afford, because we feel, or we tend to take this life insurance as if it is a cost. It's not. Really, when we understand the importance, we are going to go through that. When you understand the importance of life insurance, which is to protect yourself, not just when you die, even when you get sick, critical illness, terminal illness, chronic illness, and you're not able to go to work, this life insurance is going to come to your rescue, and you're going to be able to actually not miss out on any of the responsibilities you're actually taking care of while you're working. So to putting this number together, it's not actually what you feel like I can afford and don't feel it. You're supposed to pick a number that is going to take care of you effectively, you and your family, if you happen to be sick or if, God forbid, you happen to pass. So this magic number, which is 580, to me as a financial professional, it is not enough. As we can all see here, all these numbers we're putting here are just, it's like everything you have to pay back. But remember, let's assume, God forbid, something happened and John is no longer there. But John has 2 children. John has a home. John has some debts left behind. He doesn't want to leave all that baggage to his family. As a good husband, as a good father, he would love to leave everything cleared and then leave extra income for his children and his spouse to survive on going forward. So on the minimum, on this note here, on the minimum, John cannot go below 580,000. If that is the bare minimum, just to take care of what he owes or what will take his children to school, if he wants to really leave his family comfortable, at least he needs to throw in extra 300,000. Again, to our listeners, this is an example to Mr. John Shema. Remember, financial need is different based on a family's financial need. Again, each family is different and their financial needs are different. So don't take this that every person needs to have that, because maybe you don't have a home. Maybe you don't have any debts. You're completely good. Maybe you don't have children yet. But if you're young, those children are going to come. But if your home is paid off and you don't have any loans, maybe you're going to need a slightly different figure here. But I want you to take a note. Just think about what you have and jot it down. That is going to give you the number you need. Again, every family has a different financial need. The purpose of this exercise is to show you and myself how to calculate the need or how much of a life insurance every family needs. It's not about the cheaper one, it's about actually what is needed. That is how we find actually that part. And then we get to another part of helping you. That is why we always tell you, our listeners, you need a financial professional to help you go through this exercise, make it easier for you, so that when you pick a policy or you need to protect your family, you pick the best one. At least you pick it when you know exactly what you're picking. So we don't just go there by looking at how much you need, but we also help you to find actually the money to fund that need that you have. So let me say, Mr. John, when I was talking to Mr. John, John says, for me to be comfortable, I can only afford $200 a month towards my life insurance. But then when I was talking to Mr. John, he was currently funding a group life. A group life insurance, for our listeners who don't understand possibly what it is, group life insurance are those life insurance we get from our employers or where we work. So it is a benefit there. If I work with the company ABC and they offer that benefit, I can have it, but that is not my personalized policy, because that is actually written under company ABC. I'm just there as a beneficiary of it. If I ever die while I'm still working there, it does not come with living benefits. So if I'm sick, or if Mr. John is sick, he will never ever access that life insurance, because that is just a traditional term life that is owned by company ABC. If he gets sick, he will never get it unless he dies from that particular job. So if Mr. John was paying $100 towards that group life, can we actually use that $100 to bring it towards actually the policy that can help him when he gets sick or when he passes? So we are able to recover another $100 from a group life he possibly doesn't need, or even any traditional life insurance that does not serve his purpose. Now we're able to recover another $100. We talked to Mr. John. You're contributing currently to a 401k, but he was actually going over what his employer is matching by $200. So now Mr. John, because he understood that the products we do offer, they come with better actually benefits, he was willing to contribute to towards his 401k only the percentage that his company is matching, and putting the other, just to maximize, actually to diversify his options, putting the other $200 towards the index universal life that was going to give him the tax-free death benefit when he passes, the tax-free living benefits when he gets sick, and actually retirement benefits when he gets older. Already, we have actually collected $500. Imagine here, you can see the numbers. Initially, Mr. John, he thought that the only amount he can afford was only $200 before he understood that there is actually some money going somewhere else that is not serving his purpose. So as professionals, this is what we help you to do. This is what we do on a daily basis. This is the experience we do have here. We go with you, we hold your hand to find out actually how to fund what you need. And then, lucky enough, Mr. John was also getting a $5,000 check every year through tax returns. And he was willing actually to use that towards actually the life insurance for his children. So most of the time, we think we can't afford just because we don't actually know what we need, or we don't know where to get the funds. So again, this is called a needs analysis that helps an individual based on their financial need. And every family, again, is different. Every individual is different. That is, we are here every Thursday, tackling different topics, helping our families and our communities and ourselves to learn better, to know better what we need, to actually tackle these issues with actual knowledge. So this is for the part of a needs analysis. If you need us to do your own family's needs analysis, we are here again. Call upon us. We have free consultations to help you go through all the needs analysis. You can do as many as you want until you reach that number, that magical number that is going to help you and your family to protect yourself actually the right way. So with that, we're going to go through now the presentation that we have for you that is going to take us through the need. Why do we need life insurance? What does it do for us? I think after going through that small exercise, I believe now someone who didn't know where to start, or who didn't know maybe how much do I need, it depends on how much I owe. It's actually now time to think about that. Always put those numbers together, because those numbers actually mean a lot. Because if you happen to pick something, just life insurance from anywhere, without having the real numbers, you might pick 200,000 thinking that it is easier for you because you're able to pay less. But does it really make sense if you pick a 200,000 life insurance when you need 600? It is not going to serve you the purpose. Again, that was an exercise. I love to start with exercises. So at least we have that icebreaker to think about what we need even before we get into the real presentation. So now, as I said, my name is Immaculate Businje. We're going to go through the needs analysis, the presentation together, and see what exactly do we need. What is life insurance? Who needs it and why? I think this is a question we get most of the time from our listeners, who wants to understand exactly what is it, what is that life insurance, and who needs it. So life insurance, if we can actually define it, because we don't want to take it for granted that everybody understands, it is a financial product that provides a lump sum payment to beneficiaries upon the insured's death or sickness. It is designed to offer financial security and peace of mind and income replacement. That is exactly what we're talking about when we're going through the needs analysis. So like we protect our homes, like we protect our cars, we need to protect the source of it all, which is you and myself. because I cannot own that home. I cannot own that beautiful car if I'm not alive, or if I'm critically ill and I'm not able to actually bring that income to give me what I need. So that is life insurance, to protect your life, to protect your income, to protect your loved ones. There's nothing that you can ever actually equate to that. We can protect anything else, but if you, the source, you are not protected, then everything else you have might be actually floating. So when we say who needs life insurance, so we mean anyone who has debts, like we were saying in the previous exercise, anyone who has debts or someone who relies on their income for survival should consider getting life insurance coverage. So to make it easy, does anyone in my life benefit from or need my financial support? For example, if I can give my own example, I'm a mother. My children depends on me for financial support. I depend on my income for my own self. So if anyone depends on you for financial support, or if you yourself, if you can't survive without working, then obviously life insurance, you need it because you can't do without it. So again, to be able to go through this presentation, I need all of it. It's always good to ask yourself, put yourself there, ask yourself those questions. So without an income, how do you sustain your living expenses? Think about it. All the bills you have today, those carnots, those rent or mortgage, or anything you need to take care of yourself. If you don't have the income, how are those living expenses are going to be actually covered? If you have a family and you're no longer allowed to provide for your family, how are they going to survive? We are talking about who needs life insurance. Do you have a family? If you're sick, if you're critically ill, terminally ill, or God forbid you're gone and you're no longer there, they depended on your income to survive. How are they going to survive? Think about that. Do you have a debt? If you have a debt, for example, you have a mortgage, you have student loans, if you're no longer able to go to work or you pass away, are you going to leave the debts to your family, to your children? They lose you and then you leave them with a baggage? Or you want to clear your debt, even when you're gone, at least they'll have that loss, but not, you're not going to leave them floating in debts. This is all telling you, if you have any of those, if you need income to survive, if you have a family, if you have a debt, you need life insurance. So when it comes to life insurance, you need to make sure that the policy that you get, because life insurance, we have so many out there, like we were talking about the ones we get from jobs, our place of work, or the ones you go to your bank and they tell you, you know what, you can pay $20 and get 200,000. But would that actually cover you if you get sick, if you retire, or if you die? So the life insurance we're talking about are those life insurance that actually cover you where with all your life's what ifs. If you retire, do you have retirement savings? For example, if you live a long life, do you have retirement savings? Or if something happens to you, do you want to be able to cover yourself? So we want to make sure that actually when anything happens to you, you're able to sustain the living you have, the way you have been, you're living, your style of life that you have been living. Let me say, if you get sick, are you covered? Most of the time when we think about life insurance, we think about death. Those days are gone, whereby the life insurance has to come to your beneficiaries, not yourself. All the products we have nowadays, you can become your own beneficiary if you happen to be critically ill, terminally ill, chronically ill, and you have a life insurance with living benefits, which is what we offer. So if you die too soon, you're gone, yes. The family is going to mourn, yes. But the family is now going to go to lose all the benefits they had from you. So the life insurance is going to come to your rescue if you happen to die. So this again, this is like something to ponder about. Will I live a long life, a long time, get sick, or die too soon? It's just a matter of when. We all know getting sick or dying, it is going to happen, but we don't know when. Do you want to actually secure that and protect yourself, protect your children, protect your spouse, even yourself, so that you don't have to say, I wish I knew, because that is why we are here. It is a crusade we are on to make sure that every family, every individual is safe, because we tend to secure our belongings, but the source is not secure. And again, if you get sick and you can't go to work, how will you pay your bills? We see in statistics that every year millions of Americans are diagnosed with a heart attack, stroke, or cancer. And the average happens to be actually surprising. 43 years old, people are getting these critical or even critical illnesses that are actually messing up with families and individuals. You don't want to be part of that statistics. Yes, having life insurance is not going to stop you from getting sick. It is not going to stop you from dying, but it's going to protect your family, and it is going to protect yourself. You're not going to start putting up a GoFundMe when you sustain yourself and your family while you are still actually healthy. And here they're telling us again with numbers, 70% of these people who get sick, they will survive. But more than half of those will go bankrupt. You know why? Because if someone has a cancer and they have no policy to actually go to their rescue, they are going to stay, actually, by the time they recover, the deaths they will be having is going to be actually as bad as dying, because they are going to go bankrupt. Although they survived, but they will have nothing to survive with, because we can all understand, the cost of putting someone with cancer into these hospitals and medicine can be devastating. Plus, when you're sick, your bills are not going to stop. Your mortgage is not going to stop. Your kids who are in school are not going to stop. So you don't want to go there. So if you're gone and your paycheck is gone, how will your family survive financially? We have to think about that. It's not a scary tactic. We know it happens. We see it happen every single time. So if it does happen, then let us get prepared so we don't actually get surprised. So if you die too soon, would you want your mortgage or other debts to be paid? Of course, I will want everything to be paid. Would your family still need a reliable monthly income? And if so, how long would they need this income? Imagine the exercise we're going through, Mr. John, who was 40 with two young children who are teenagers. If God forbid he happens to go, how long do you think those young children are going to need the income before they can actually be able to sustain themselves? That is a long time. That home is going to need to be paid off, and these children are going to need to go to school, and they will need to survive until they're old enough actually to sustain themselves. This is why we say every individual needs a life insurance more than we cover our car insurance and the home insurance. Before you do that, cover the source again. This is why this month, I think whoever brought up that, so that this was very, very important. More often than not, we can never drive our cars without car insurance. We cannot actually have our homes without a home insurance. But we don't even remember how we acquired those homes, how we acquired those beautiful cars, because we're able to work. But we don't want to think about us living or even getting sick. It's not even a matter of dying. It's a matter of getting sick, and you lose the home, you lose everything you had. By the time you come back to normal, you already have nothing left for you. But then we have solutions, We don't want you to feel like this is actually something very bad and that we are so scared. There are threats, yes, to getting sick or someone passing, but we have also solutions for everyone. When it comes to death, we have life insurance. That is a solution, because we cannot stop death, but we can actually minimize its impact by protecting your loved ones. Yes, you're gone, or I'm gone, but my family is safe. My home is not gone. My children are going to still go to school, and they will live their lives. They will only lose one person, but at least their family is not going to, their lives are not going to stop. Or if you get sick, you're protecting your income. How? Because if you're sick and you can't go to work, you're going to get those living benefits, and the living benefits are going to protect the income that was coming in. Again, if you're paying your mortgage, it's going to keep to be paid. If your kids are going to school, they are going to keep going to school, and they're going to keep actually surviving. That is what we need. Those are the solutions we're talking about. We don't want to just want to think about the threats, but we also want to provide the solutions. Or if you get older, which is what we need, you have some retirement planning done for you by the policy you picked. Every time you think about any threat and you don't have a solution, you're going to become one of the statistics. Those who live, and then we start putting a GoFundMe. You gone and your family is thrown out of the home. You grow old. You start working at 80 years old because you did not plan. We are all here to learn about the solutions that will help us live better lives now, today. Tomorrow, if we get sick, we are covered. Tomorrow, if something happens and someone is gone, the family is covered. And in the future, when we are in the old age, which is what we all want, we have enough saved for us to live comfortably in our old age. And then when we talk about those life insurance, we don't just want to generalize. We have different options. Like we were saying from the beginning, every family has a different financial need. And that does not just end on the amount of what they need. It also depends on, also goes with the type of life insurance they need. So with those life insurance, there are so many out there. But tonight, I want to focus on mainly two life insurances. I'm going to focus on two. Then the rest we can possibly go together. That is why we say this is a general discussion. But if you need a deeper, personalized session, we are always here to learn with you so that we can actually go deeper than what we're doing in this 1 hour. So one of the types of life insurance we do offer here is the term life insurance. The term I actually tend to say is similar to rent. Like you rent your home or you rent your apartment, it's not your own. You're renting it the same way we're talking about the group life from work. You're renting it from company ABC where you work. It comes with no cash growth, so no cash value. It is cheaper in the short term. But again, because it's just a term, when it ends, it's going to be more expensive for you. Because if you want to go back and buy it, it is going to be costly because all life insurances, they are cheaper with age and cheaper with health. If you're healthy, you get it cheaper. If you're younger, it's even more cheaper. But again, if you take 30 years, after 30 years, you're going to be possibly 50 or 60 or 70. It's going to cost you a lot of money. They're telling us here it's cheaper in the short term, expensive in the long run. That is what they mean, because if you buy it when you're 60 or 50, 70 is going to cost you so much. Some of them can be convertible, but remember, it does not have any cash value and does not have also the retirement benefits we're talking about. Now we have another one that is actually my favorite. Not saying the term is not good, because again, it depends on what your needs are. So with the Index Universal Life, this is a permanent life insurance. It comes with a retirement cash value, which is retirement planning we're talking about. It covers you up to 121 years of age. Again, that is for whole life, because we haven't seen someone who has gone beyond that. So it comes with index-linked gains, which is actually protected from the market losses. We can go deeper into those again if you give us a chance to give you personalized sessions, because most of these sessions normally they are payable, but we are here because this is a crusade we are on to ensure that we are all learning together. And then the most important part of this as well, tax advantaged income. If you have an Index Universal Life and you pass, God forbid, your family will get a tax-free 100% benefit that you actually saved for them. So those types of life insurance, again, like you were saying, They are cheaper. These are the premiums, how much you pay. They go up as you age. As you age, the premiums will go up. And that is why we always encourage young people or people. Young people doesn't have any limit. You're young the way you are today. Don't wait for next year. Don't wait for 2 years to come, because you don't even know what will happen those years that will come. A sickness might come in. Something might happen as you keep pushing. So consider yourself today, because today is the youngest you can ever be. So again, to summarize a little bit, the term life, they say, as we say, is cheap with living benefits within the term. Our term life, again, it does come with the living benefits. If you covered for 35 years, you have 100% tax-free death benefit for 35 years and tax-free living benefits for 35 years if you happen to be sick. But if 35 years are gone, then you have no coverage. It is done. It is just a protection. There is no cash value, and it ends. The maximum we do give is 35 years. But again, depending on your need, if your need is to protect yourself or your family for 30 or 35 years, even 10, that is what you need. That is your policy. Because again, that is what you want. You're not interested in cash value. You're not interested in protecting yourself for the rest of your life. Then this is cheaper for you. You can as well take that if that is what you want. But always want the best for you, because you don't ever know how long you're going to live, or you don't want to keep money, keep paying the premiums that will never come back. When you could put them somewhere, you kill so many birds with one stone. You have protection and you have savings on the other side. So when we come to Index Universal Life, which is why I think it is the best one, we usually say, it has two components: the protection on one side and accumulation, which is the cash we're talking about that we don't have in term. Protection is your life insurance. When you get sick, terminal, critical, chronic, you access 100% your benefits. Or if you die, your beneficiaries are going to access a tax-free 100%. Remember on this one, you become your own beneficiary. It doesn't have to be taken by someone else if you happen to get sick. Plus the cash accumulation that you can take out anytime you want and use it for anything you want. You don't have to be sick. You don't have to die. That is your bank. You actually have a chance to have your own bank, whereby you don't have to go to the bank and be rejected for any loans, because you can actually loan yourself from your own account. So the Index Universal Life is very good because it's long term. Again, we have those protections of living benefits and death benefits. You accumulate cash for investments, whereby your money is protected from the market. We've seen how the markets fluctuates, but with Index Universal Life, you have that floor rate, whereby even if the market goes south, you actually set, you're not going to lose your money. This is just a summary here. I wanted to summarize a little bit about the Index Universal Life. It protects you your whole life. If you live too long, you have the tax-free action. You have actually the tax advantaged retirement benefits. If you die too soon, your family do have the tax-free death benefit. And if you live, actually, if you get sick, you yourself, you get tax-free living benefits. So you want to get something that is actually going to protect you all around. You don't want to be protected just to protect yourself for a few years, and then when those years goes around, you're left without any protection. That is what we need for you. We want you to make sure that you actually protected for good. I'm trying to summarize a little bit to get to the end of it, so I can actually open up for a Q&A so that we can be able to learn all together. This is an interactive again. So with Index Universal Life, as I can summarize a little bit here, it has income tax-free death benefit, tax-deferred cash value accumulation, which is for retirement, income tax advantage distribution. You can get your money, you loan yourself, and you don't even have to pay back because it's your bank. So you don't have to pay back. You have a safety and security with a market floor rate that you can never go under. When other people are crying in the market, losing their money, you sit back and enjoy the safety and security of the market flow rate, the liquidity. You have the flexibility to access your money at any time. Again, it is your bank. It is your money. You don't have to ask for permission to take it out. Again, with the living benefits, it comes to you with no additional cost. You take a policy with Index Universal Life or with even term, the living benefits are come for you free of charge. You don't have to pay. And critical, like critical illness rider, which is part of the living benefits, covers heart attack, stroke, and so many of anything you think of that is critical. And it is your doctor, not even the life insurance doctor, that approves. Your primary care provider will approve and say, my patient is critically ill, chronically ill, terminally ill, and the insurance company will write you a check because you earned it. So what do we get from here? What action should we take? As we say, take action, secure your future today. Don't actually wait, because you never know what tomorrow will bring. There are so many people who would love to have life insurance protection, but they cannot actually qualify because they lost insurability, because they are one sick, or they got into other issues that they are not able to qualify. So the area you actually lock in your protection is now, because you still have the chance to be able to get actually approved or qualified. Protect your family and your income. Don't wait until it's too late. Grow your wealth tax-free and use it when you need it. And then get living benefits for medical emergencies, just in case it happens. Remember, it's a matter of when. It's not if it's going to happen. We all know it will happen one time. So the earlier we do that, the better. I thank you so much for listening. If you need individualized sessions, again, here is my email, ibfinancialfreedom@gmail.com, or you can even call me at 817-808-4597. And I'm always here to learn with you, to hold your hand, do those needs analysis, go through different options that can help you and your family to learn actually a better financial free life or even future. So this is actually a time for a Q&A. I'll ask you to open your mics and let's do this together. I want to learn from you as well. Let's go back. The floor is open, team. Any questions, any additions? Let's get to this and see how well we can protect our futures and our families, our todays, our tomorrow, and our families as well. Thank you.
Thank you so much, Miss Immaculate. That was a beautiful presentation.
Yes, sir.
I couldn't help but think about how sometimes we forget, because of the culture that we live in, that none of us got here on our own, right? We're literally standing on the shoulders of those that came before us. And someone after us will stand on our shoulders. So life insurance is just kind of acknowledging that flow of life and not pretending that we're a one-man island, you know? Because when you think about our culture today, we glorify independence and just doing everything by your own strength. But I think the real strength is making sure that people tied to you don't collapse when you're gone. And for a believer, scripture reminds us that we're part of a body. We're not isolated parts. So insurance is one practical way of living out this truth, that we're protecting the whole body, not just the finger. So before you, there was your parents, and there was your grandparents, and their great-grandparents. And it was because of their decisions, good decisions, that you're here today enjoying a comfortable life. So you should not think that, well, if I'm gone, who cares? I'm not going to be here to witness the lives that they're going to live. So who cares? But if you think about it, you should. You really should. You should care about how your kids survive, how your great grandkids live, and you're not leaving them to struggle. But to go on to the question, I wanted you to help us clarify that this IUL, for example, or even any of the terms, one of the biggest determining factor of how big your premium is going to be is your age. So you mentioned Shema and John Shema. He was a 40-year-old with two kids and a family and a mortgage. For a person in their teens or in their early 20s with just an entry-level job, not quite sure where they're going to land in their career, how much money they're going to make, whether or not they're going to have kids or buy a house or live in America. Um, how do they think about what policy to buy, one, and the premium to set out? Because a lot of the things in their life is uncertain. They don't even have a girlfriend or a boyfriend to know whether or not they're going to have one, two, five kids. Um, and which of the policies that are there allow you to increase your premiums based on your life changes, your job changes, your location you're staying at changes. So is there a policy or is it all of them allow you to kind of increase or decrease your premiums as you see fit? Thank you.
Thank you so very much, Mr. Corin. Those are actually great points out there. So we should not just, as you said, live just our lives, but there are other people who are going. So we always lay great foundation for our generations to come. So when it comes to that question of, as I was saying during that exercise, the life insurance needs is different based on a person or a family. And for the young people, the beauty of young people, actually those are the questions we tend to get from young people who feel like, I'm young, I have no family, I have nothing much to protect. But the major factor that actually should help young people to actually learn to getting their policies early is that age factor. Because the younger you are, you lock in everything. Let me say you pick an index universal life insurance. An index universal life insurance is very flexible. You can start with $100, $200, and later decide to add you make it 500, or even you could start on a higher end and reduce it. So it is very, very flexible, but the important part is to start early because you're locking not just the premium, but you're also locking in your age because a 20-year-old will possibly pay a half. Actually, it's not possible, less than a half of a 40-year-old. And that is going to be for life. So even before you think about, I don't have children, but they're going to come in the future. You might not have a girlfriend today. You might not have a home today. You might not have children today. But you actually, when you plan for the future. That is the generational wealth creation, You plan for your family even before it comes. That is actually, that is how it is because we grow up, we have children, we're taking care of our children, but we know in the future, in 5, 10 years, they will be on their own. But there is someone who laid the foundation. So if someone is maybe younger, like 15-year-old, they're not going to be able to do anything anyway. It's their families that are going to do that, the parents. But for a young adult, whether you have a family or not, whether you have this or not, think about locking those major, like the premiums, the health. Because I've had so many young people who cannot qualify for a life, even a term. Terms are actually even more complicated to get than even IUL. Why? Because they have a DY. Can you imagine that? A DY can disqualify you from getting a life insurance because you're suicidal. That's how they see it. Or you got sick, something happened and you got sick at an early age. So to me, I tell people, secure something now. secure what you can afford today, then in the future you can change it. But that is going to be helped by you. What kind of a product are you going to pick that is going to be flexible for you to be able to adjust? So for young people, I actually really, to tell the truth, I never want to tell a young person to take a term life because first of all, term, it's number of years. If you're 20 and getting a 30-year term, by 50 it's done, and that is when you need it. So that is why we encourage everyone, or our listeners, talk to a financial professional so that they can go through everything that you need. They give you different options so you can pick what is best for you. There is no a particular amount that actually fits. It's not one thing that fits all. Every person is different. Every family is different. Take what you can afford. That is why I tell my people, take what you can afford. Don't put a baggage on your head that you're not going to be able to carry. Take what you can afford. In the future, you can actually increase it. Hope I was able to answer your question, Mr. Corin.
Yes, perfect.
Thank you. Any other questions here? Anything to add? It doesn't have to be a question. You can add something.
I have a question.
Yes, please.
So you mentioned that when Mr. Shema comes to you, you go through kind of like a financial session where you can help them figure out what to do. And you mentioned that sometimes they have like the group insurance like from work. So when you sit down with them, do you advise them to leave that insurance?
Thank you so much, Happiness, for that. No, the answer is a big no. So I never ever advise anyone to leave anything they have until they approved for another one. That is a big mistake. Any financial professional should never ever advise you to drop what you have now. It doesn't matter how small or how, I don't want to even call it bad. A group life is not your own. I advise Mr. Shema, keep your group life for now. Let us apply for you your personalized individual index universal life or insurance you want. As soon as you get approved, we're going to go ahead and leave that because that is not his anyways, because that is a group from work. He doesn't need it. If he has a personalized one, he does not need that. Or if he wants, because most of the time those ones are very cheap. If he wants to keep that to actually have another cushion, they can keep it as well. Because remember, those ones are usually not that expensive. If he wants to keep another one, because life insurance is not like a car insurance or a home insurance, because with a car insurance, even if you have 10, they're going to give you the value of your car or your home. But with life insurance, you can have more than one, and you can actually take benefits from all of them. So at the moment, I don't advise to leave it, but if he needed it to protect themselves, and now they have a better one, it is their choice to pick what they want to do.
Okay, thank you.
Thank you. That was good.
And I have a question too.
Yes, ma'am.
You just answered a great question. Can that group, since it's payroll deductible, can it be transferred once you are approved to the personalized one? Can that be transferred to the new one?
Thank you, Ms. Leila. Unfortunately not. Most of this group life. So this is not. So that's what I tell most of my professional people, because group life insurance is never written, you never have any document about that. So let me say I work for Apple. I have a life insurance from Apple. I don't have anything because that group, that actually policy is for Apple. But Apple adds its employees, the beneficiaries of that. So when you leave the company, you lose it. I always tell my people, I worked for a company for over 10 years. I had a life insurance for all those 10 years. When I left, that was it. When you leave, you leave. You don't have anything to live with because there's no cash there. There's nothing you're taking out. It is not even transferable most of the time. Because remember, it is subsidized because I think the companies pay some parts and you pay, they subsidize it for you, so you don't pay much. And most of the time, because they know you're not going to be with that company forever. So at one point, you're going to go, and when you go, you're going to lose it. So you are protected when you're there. When you leave, you don't have it. It's always just a traditional term life. And I always advise my clients, go talk to your benefit administrator and ask, is my life insurance transferable if I was to move to another company or if I was to leave this job? So consult with your benefit administrator. And most of the time, though, they are not transferable, but it's always good to verify and cross-check with your actually benefit administrator to ensure that that is what it is. But all I know, group life has no cash value. Group life are traditional term life insurance with no living benefits as well. Only when you die, you benefit from it. When you get sick, there's no benefit for a group life. Thank
As
you.
always, thank you.
Thank you, ma'am.
Thank you, Ms. Immaculate. Very well put in the area of the group life and the transferability, because it's actually very few companies out there that can have such a good policy that can be transferred, which can be next to none. So the overall needs analysis, you did a very good job breaking it down into the 3 sections of the life insurance, the retirement, which can go for the IUL, and if the retirement benefits in somebody's job have been maximized, as well as meeting the retirement within that needs analysis, we can have that overflow into the other component that we have, which is the annuities. And that is another way that we can also turbocharge the annuities from excess funds that can come in if you win the lottery. Just like the lottery is trending quite high right now. So these are all tools that we're using and we're advising people. What I've found is finances are very personal, and in many ways, you also did let us know that this is a way of having a conversation with your client, a conversation through open-ended questions to reveal the client's unique financial situation, their goals, as well as their risk tolerance. So in that way, the clients are opening up and also being in a position to look into their finances personally and come up with those numbers that you worked on. Good job and very good deliberations. Thank you.
Thank you, Mr. Roy. Yes. That's why we always open up, actually, ask our viewers, take individual sessions. You'll be able to learn better, because in just 1 hour or 1.5 hours, it's not enough for us to go through everything that we need to teach you. But this is just a discussion that we have here, so we can have at least some, touch on some major pointers here. But if you need to learn more, if you need actually for us to do your family's financial needs analysis, we are here to learn with you. We are here to go with you point by point until you get what you actually need. There is no such a thing as little money or more money. Anything you need today is as good as it can be. as long as you take what you can afford and then be able to increase or decrease as you wish. I think that is the most important part. We don't want you to burden yourself with something you can't afford, because this is a long-term financial responsibility that is good for your family, but at the same time can actually also burden you if you do it yourself without consulting a financial professional to run you through to see how well you can get it set up. Thank you again for that. Anybody else? So we're getting to the end of our discussion. If anybody has something else to add, please open up your mic. We'd love to hear from you.
Thank you so much for the very informative discussion. Mine is more of maybe a conclusive thought. What are some of the surprising comments you've heard from people when you do the needs analysis? Because I thought it was very eye-opening to see and compare all our debts and how much we usually think that, oh, this life insurance policy is too big and too expensive.
Thank you so much, Dr. Sharon. Yes, actually a needs analysis. Most of my clients that we do a needs analysis together, they actually, the comments, the way they come in and the way they actually finalize what they need has always completely been a turnaround, because every client who comes in, they think about spending less. That is it. So it has actually been so helpful, because everyone, when you talk about life insurance, they'll be like, oh, help me get the cheapest. I want to pay as little money as I can. So here they're talking about what they're putting in. They're not thinking about what they're protecting. So every client who comes in, when we're done with a needs analysis, their need, or actually their way of thinking, completely changes, because now they see it's not about the $200 I pay every month. It's about what I'm getting out of that $200, because that is an investment. People look at the premiums they pay for life insurance as a cost. It's not a cost. It is an investment to yourself, to your family, to your finances, because all that money comes back to you, actual 100-folds, because your life is protected today when you get sick, tomorrow when you die, in the future when you get older. That $200 you pay every month, if you don't pay it anyway, you're going to spend it into something else that is not going to bring anything to you. So, Dr. Sharon, I've had so much. Actually, people like completely leave the exercise, completely changed in regards to what they thought about life insurance. Because most of the time people think, I'm not sick, I'm young, I'm not planning to get sick or die. They don't think about, when you think about what you owe or what your responsibilities are, and you think about not having any cushion or any protection, it's actually scary. People get scared. I'm like, I have a home, I have children, I didn't think about that. So it has always been a surprise most of the time, but a good one, because now they know better than what they knew, which is a good way of learning. Thank you, Dr. Sharon. That was good. All right, people. If nobody has something, another burning question or something to add, I'm going to go ahead and get at the end of our discussion. Thank you so much once again. During this month, we're going to go deeper. It is Life Insurance Awareness Month. We want to enlighten ourselves. We want to educate ourselves, our communities, our friends, our families. This is actually a very crucial topic. We should not actually overlook. Oh, I've heard about that. I've heard about this, but what have you done? Have you taken a step to protect yourself? Have you taken a step to learn more how you can protect your children, your finances? So this is our call to action. Protect yourself today. Don't be among the statistics that say, had I known, I wish I knew, because we're here to enlighten you. We are here to learn with you. We are here to educate one another so that we can plan our lives and for our families, for the better lives to come and the future. Thank you once again. for listening, for tuning in, for learning with us. Until again, next Thursday, the same time, with possibly a better topic and learning with you. Thank you and have a great evening.